You ready?
I know you're going to hit that button, man.
I'm not necessarily. I talk about real estate investing, talk about protecting your lifestyle, building wealth, and achieving financial freedom. That's the goal of this show. Thank you for coming back to the Seth and Morgan. I don't know if it's Seth and Morgan or Morgan and Seth. You always put yourself second. So I'll say Seth and Morgan podcast number 2. We're experimenting with some new technology setup, but we also want to bring you a show today. So I'm Morgan, and I have Seth on the line with me, and we're doing this as a bi-coastal meeting. I'm on the West Coast. He's on the East Coast. And today, in our second episode, we want to talk about the GameStop stock manipulation and looking at investments and what's probably going to happen with all of that. And then talk about how real estate as an alternative investment to the stock market is a good fit and maybe worth looking at to put into your portfolio if you're not already as an investment vehicle. I want to introduce my partner in crime and business, Mr. Seth Aruda.
Hey, everybody. How's it going? Morgan's got a new camera, so you got that plugged in. It looks real great in there. And also, I think you're using some of our new audio equipment as well. I think you got the mic hooked up also too, right?
Yes, I have a Shure SM58, I think it is, an SM58 microphone. We might go up to the SM7B. We'll probably get one and see how that looks. We want to thank Liberty Mutual and Safeco for giving us the grant to get some of this equipment. Some of it we've already purchased, and we hope to get some more and have some fun so that we can educate our clients about what we do and how we do it. Yeah, I will go through the equipment we're using. This video camera is the Canon, Canon M50? Yeah, the Canon M50 EOS camera with the 1.1 version of the software. We are plugged into Microsoft Teams running this show. We have the Rode Podcaster Pro, I believe it's called. Thank you. I know. That's great.
That's so cool. I can hear that perfectly coming in through on my end too.
So we love that equipment. I mean, the equipment's really getting cool. Oh, the Audio Technica headphones.
Oh, you're using monitors.
Nice. Yeah.
And on my end, I actually am just using more of a mobile setup. I actually did upgrade to a 1080p webcam, so I am using a little bit more of a powerful webcam, and I've got a Samsung external microphone just to help with a little bit of the sound. So not as robust as what we have actually in the studio. Hopefully when things do get back to a little bit more normalcy, we can start having guests come in and shoot a little bit more in our studio that we have set up in the other room. But baby steps, we gotta adapt and evolve. And I've been watching a lot of podcasts lately. The Bigger Pockets guys do that where, they're in one state. The guy's in Hawaii when he's not surfing. He's on the podcast. But a lot of people are doing this type of a setup right now just because, a lot of people can't get together in person. So they've evolved and adapted their business. And, that's kind of one of the reasons why we wanted to start this as soon as possible. Because there's a lot of things going on with the market, with real estate, and it's interesting to see how people evolve and adapt with their different strategies. So
yeah, that's exactly what we want to jump into. So let's do it. Let's talk about GameStop and Reddit's insane campaign to pump and dump this stock. My son was saying it's a glitch in the matrix. It's a way to print free money. I was trying to explain. He's 12. This is his first exposure to not a Ponzi scheme as much as what is this? A pump and dump, of like a penny stock pump and dump. But Seth, you were saying you actually had bought some GameStop off of those recommendations earlier.
Yeah, I actually did. I actually just started to do some just day trading about a couple weeks ago, just with a small amount of money. And, obviously, before we even get into this, I'm not a stockbroker. I do not have my Series 6 or 7. I'm not giving any type of stock recommendations or guidance. I'm just really anecdotally telling you exactly what's been going on and what I've done just over the past couple of weeks and seeing how this has kind of evolved. day trading is something that a lot of, retail investors and a lot of people, especially millennials, are getting into right now. And I guess I also heard that a lot of this activity is coming because a lot of people are at home, and a lot of people are really kind of sitting around. So the day trading has, gone up exponentially. And you're seeing a lot of millennials jump into this game as well. A lot of people like to, equate the stock market to a game, but it is an investment strategy, and that is how a lot of people really do need to look at it in that type of mindset. Yes, GameStop was one of those stocks that was basically virtually worth nothing about a few weeks ago, and you've seen its meteoric rise just over the last week, and a lot of it has been fueled by a bunch of Reddit users. They follow a thread called Wall Street Bets, and that's kind of what kind of sparked a lot of the activity that's going on right now. It all started because they caught wind that a lot of hedge funds were shorting that stock. And a group of these Reddit users got together and banded together and decided to purchase as much of that stock as they could possibly get their hands on, which caused the price to, start to rise. And then those hedge funds have to sell, those options. And that has caused even more of a frenzy in the market. And there's also another thing that happened yesterday. They also stopped and halted trades. So you could no longer buy certain stocks. So you could sell what you already had, but they would not let you purchase any more of those stock purchases. So, that really caused another, another issue with that type of investment strategy. So I know we want to kind of unpack all of that and kind of also segue into, what we do, which is we focus more on real estate investments and that as a primary strategy. And I think that just also kind of solidifies and strengthens the idea as to, why real estate is such a strong and healthy real estate investment strategy for your portfolio.
I totally agree. Let me jump on a few points there. Yeah, don't sue us, bro. we're not giving you advice in this episode about stock, but we're just talking about the news and the zeitgeist moment that we're in with it. I think about Ready Player One, where the corporations are trying to control, and you could argue that the hedge fund managers are cast in that role as the big corporations deciding that GameStop needed to go out of business, and so they were shorting it and doing it and plotting its demise. And then you have all the gamer kids that are on Twitch and on YouTube and gaming all day and hanging out with their bros online, and then deciding, okay, we're going to not let GameStop go out of business, that this is our storming of the Capitol, so to speak, in a virtual sense, and then giving you the ability to buy stock basically on margin at that point, driving up the price, driving down the liquidity of the asset there, the stock certificates for GameStop, and then the powers that be using their incumbency and their strength to halt trading, like Seth just said. It's really, in Ready Player One, I think about that movie, and the book's good too, or so my kids tell me. I didn't read it, I made them read it. That there is sort of this David versus Goliath kind of battle, like we were just saying, where the public at large and the people that are interested in gaming are using their community to protect something that they see value in, that the market, that the incumbents of our society have said that they don't believe has value anymore. So, Tesla, I think that it's worth noting, because that stock's also on a meteoric rise, has been admitted to the S&P 500. Is promoting social change, never makes a profit, not following Amazon doesn't either. Most growth stocks reinvest their profit into more growth, and that's sort of the point. It's interesting that these social commentaries are playing out here in the 21st century. It's the same story that's always been throughout time. Scarcity of a resource increases its value. But you can go all the way back to the tulip bulb trading issues in Holland, and those sort of, look it up on Wikipedia if you need to. But those sort of pump and dump schemes, if you want, you could say it a scheme from one side, or scheme in American context has a negative connotation. In European context, it just means like a plan. But those pump and dump plans, or my son was saying he thinks it's a glitch in the matrix. It's a way to print free money from what he can tell. If everybody agrees to buy this same stock and increase its price, that drives up the value. That's sort of how Bitcoin works too. That it's a confidence in that, and having other people buy into it is the only reason that it has value. It makes me think, we're printing a lot of money, trillions of dollars in this economy right now, giving away that money from the government back to taxpayers. Those kids can be putting, I say kids loosely, those gamers can put that money into the stock market and have effect this way. If the government's allowed to do it, aren't we the people allowed to do it?
Yeah, no, I completely agree with that. There was an excerpt on one of the Reddit forums that kind of gives a little kind of synopsis of kind of what happened with GameStop, and I'll kind of let you kind of fill you in on what that was. But a few weeks ago on Redditor, on the Wall Street Bets, a Redditor noticed that a hedge fund had taken a massive amount of short trades against GameStop. They convinced everyone on the thread to join forces and buy as much GameStop stock as possible. So this made the price rise, and the hedge fund's short position started to lose billions of dollars. Their losses even surpassed $13 billion that the hedge fund was worth. Eventually, the hedge fund had to close their short positions and buy all the GameStop stock back at a much higher price, sending the price even higher still. This is called what Morgan said, a short squeeze. Now, the hedge fund is declaring bankruptcy, and the Reddit thread is combing through other hedge funds with massive short exposure so they can short squeeze them into bankruptcy as well. All of Wall Street is saying that the public joining together in this fashion should be illegal, but really, they just lost their own game to the masses.
Yeah, that's exactly what I'm saying. I haven't even read that. I actually have not read anything about it. My 12-year-old son was just telling me about it. We should probably have him on a guest on the show.
We should, yeah. And this is what happens when you're so focused on, real estate investing and protecting those assets for your clients, and not watching the stock market go up and down, especially during these, crazy times with, shorts and, pump and dump schemes, because it is a little bit of a risky business, as a lot of people like to say. So it's interesting as to, what's happening with the stock market. But, I go back and think about what these kids are doing. This is very interesting because, these kids are coming of age now, and a lot of them saw what happened to their parents during the 2008 financial collapse. They saw their parents lose their houses, their 401ks, and, they've seen how the government and these other hedge funds bailed each other out and basically walk around like made men, and they have no repercussions for their actions. So this is kind of one of those situations where I feel that, people have seen what has happened in the past, and they're coming after these people in a way that, they did not see it was possible. And that kind of shows you what the power of the internet does, and why having a free market capitalistic society and a free internet is very, very important. It can not only benefit the elite when it serves them.
Yeah, right. The elite is sort of a misnomer. The average stockholder is a widow in her mid to late 70s. That's just the fact, is that's who really owns most of the stock at the end of the day. So, they're widows. There are the 1% floating out there that have huge balance sheet valuations, but that doesn't mean that they have all that liquidity either. I do see it as class warfare, like you're saying, though. It is there's a change of tide right now with COVID, with the age of millennials and XYZers. I think that's Generation Z, we would say now. I don't know if that's what they would call themselves, but people that are coming of age now in the 21st century, and versus, if you will, the baby boomers and those that are holding assets, paper and otherwise, paper like the stock market, hard assets like real estate, and the paradigm shift that's happening. So I absolutely agree with what you're saying too, Seth. It's an interesting time. The internet is the power that those folks older than me, right? And I wasn't born when I was born. The internet didn't quite exist in its modern format in the 90s, and I remember Y2K, OK, and all that kind of stuff. That was the first internet boom, and then the folks that were older than myself, that were then in power, so to speak, weren't ready for everything to be digitized. They still wanted their yellow pages directories, and they still wanted things to work the way they used to. So we're in a different time now. This is 20 years later. It's the generation now, and the number of people now that have access to information and power of the cell phone and all of that at their fingertips, and are super smarter than the hedge fund managers who hold themselves up as the smartest guy in the room, smarter than them in a lot of ways on the digital technology stuff, and are able to go into their house, their world, the towers of Wall Street, and tear it down like this is exciting, and it's a changing of the guard. It's a transformation of society. Xers weren't able to do it because we were the generation born was too small of a generation after the boomers. But the millennials and the Generation Zs are definitely, and with their connectivity and everybody being stuck at home, so to speak, are definitely able to make these kinds of changes, and their changes overdue. So it's to me, it's healthy and good for society. Seth, you touched on it exactly. The bailouts of 2008, the zombie banks and the zombie businesses that were propped up with free money that really had no business staying in business and should have returned to the forest floor of capitalism and provided the pollination, provided the fertilizer, if you will, for the next generation of things to come up. Nobody goes willingly into the darkness that way, right? No business wants to die. Nobody wants to die. So I think that's what we're seeing, is just that transformation of society from that old world economy to, I don't know what it is, a postmodern economy. That's for historians to decide sometime in the future.
Yeah, the history books have yet to be written, but usually when history has been written, it's written by the winners.
That's true too.
One thing you did touch on, which was really important, because we didn't touch on this a lot, but I do want to go back to this because it does affect what we will segue into when we talk about real estate, is the manipulation of the market yesterday as well. Many of these retail traders, they are actually getting hung out to dry right now. Halted trading yesterday. From an ethical standpoint, manipulating an investment strategy like that, it really does, taint the overall picture of what investing and what the stock market is really supposed to be used for. And that kind of relates to real estate as well. We talked about what happened in the 2008 financial collapse, and real estate was not, was also impacted by that as well. We saw real estate really take a dive due to, the junk loans that were being sold and, all the things that happened at that time with the housing market. So, but we've seen the real estate market, come back from that. So it has come back to life, but, those are tangible assets. And we focus more on, working with clients that really see investing in real estate as a primary investment strategy. I'm sure that they have other diversified strategies in their portfolio as well. But most of our clients and our referral partners and the people that we work with, they are 100% invested in buying and selling real estate and, acquiring assets through real estate investing. So I kind of wanted to maybe ask you about that. When you have a game, I'm going to call it, a game that is being manipulated like that, that kind of also strengthens the idea of other asset strategies like real estate. Because if you look at what's been happening with real estate over the past 5-10 years, it's been on a very healthy growth cycle. And they're already expecting, real estate to be very, very healthy going into 2021 this year.
Let's go into the final segment and do what we were talking about and talk about the real estate market and locally here and what we are seeing and what we know, and go from there. So I'll let you start with that, Seth, because I mean you are on the pulse of the local San Diego real estate market, and you've been insuring real estate risk since 2008, I think, right?
Yeah. Yeah, we've been working really closely with real estate agents and real estate investors and mortgage companies, escrow companies in California, and really kind of trying to stay focused on that niche to provide our services and our resources to those different, business partners and their clients. Because, what we're trying to do is really change the mindset of people when they think about their insurance protection for their asset portfolio, especially when it comes to their real estate assets. A lot of people don't realize how important it is to have, an insurance agent on their team, along with their CPA, their CFP, and, their real estate agent, to provide a real healthy ecosystem to make sure their assets are protected, they can build wealth and, live their best life. So just a bunch of things that have been happening just last year and then moving into this year, real estate was worried that the industry was going to be really impacted by, the pandemic and the COVID situation. And it actually had the opposite effect, which we were very happy to see because, we're in that business and a lot of our clients and our referral partners are in that business. And it really did evolve and adapt like we talked about earlier. And now moving into 2021, it looks like the real estate market in San Diego is going to be pretty healthy. I mean, they're already expecting an 8% increase or appreciation. And that's been in a bunch of different news outlets, and that's been talked about by a number of different real estate agents. So things look like they're looking pretty good going into this year. I think, a lot of mortgage advisors that we talk to say rates should stay pretty stable. I don't think the Federal Reserve has talked about doing anything too drastic, but I think everything going into this year is looking very, very promising for, our industry and also, the real estate industry as well.
I actually reluctantly totally agree with you. And I'll say reluctantly because I've been a pretty big bear on real estate, as we can get into in later episodes. But in that, as a personal investment for where I lived, I went through the 2008 crash and rebound, and I rode it all the way down and all the way back up. And it took a long time. And in that period of time, my family kind of had outgrown the house. We ended up, we bought the house. It was just me and my wife. And 7 years later, we had 3 kids. And then it's 2008, and the house is worth less than we paid for it. So I know firsthand, and I feel customers' pain that have been through that. And as soon as I was able to get above water and remove the equity we'd put in and move on, I did that. I ended up investing in here in the business, and we still currently rent. So I've been watching the market very closely, and I agree with you. It's, what I'm seeing is people are staying at home so much more that the larger homes are actually becoming more attractive for folks that otherwise would have been, the kids are at school and mom and dad both work outside the house. Well, now maybe mom and dad are working in different rooms and the kids are doing school from another room. you need some elbow space for that. On the internet, on YouTube, there's a lot of claims of max exodus from California, and taxes are a real thing, and there's a lot of things that can be fixed here. But the weather, it's raining today, but it's probably other than that, it's usually very, very, very nice. So and the quality of life is pretty darn good too, and there's a lot of people and there's a lot of things to do. So I don't think that I think that the demise of California long term is overrated, and you're seeing that especially in like markets like San Diego that are highly desirable for single family residences. And we're going to focus in on single family residences today. They're a great investment vehicle. They're a great way to protect your family's wealth. They usually represent about the largest asset that somebody has, and it's as well as their place where they live. So, there's a lot to be said about having a risk manager on your team, like Seth was saying, an insurance agent. Not all insurance agents look at real estate the way we do, and that's something to be aware of, that, a lot of them are caught up in their own ecosystem where every problem looks like it needs an insurance policy, right? Because that's how they get paid and how we get paid. But there's a different technique about managing risk versus just buying more insurance to have more insurance. There is a strategy to it, and that's what we try to focus in on and help our clients with, so that they don't just end up either overinsured and insurance poor, but are properly protected and able to build wealth, increase the equity in their investments, and achieve financial freedom, or live their best life, however you want to say that. But we look at that as financial freedom and total financial independence. So yeah, absolutely.
Yeah, it's real interesting because, we do want to touch on that single family or that primary residence strategy and mindset versus like an investment strategy and mindset. Like if you're buying like a rental property or like an apartment building, it's a different strategy because, with your primary residence, you have to live there. So if you're renting, you're paying rents to somebody else, but you have to have a different mindset or a different investment strategy when you're talking about your primary residence and protecting that asset and that income for your family versus, should I buy another rental property, or should I buy an apartment building, or should I do a 1031 exchange and buy another triplex or duplex? You have to live somewhere. And if you're renting, you're not building any type of wealth by, creating somebody else's wealth. If you're paying rent to somebody else, it does make sense to, buy something so you can live there with your family. And especially now with the pandemic and the COVID, that has been changing a lot of people's mindset. They have really been thinking about where they live and the space that they have, and if they're going to be home more, they want more space. And that's a lot of the reason why we're seeing so much activity in the marketplace here, is because people are working from home, their kids are at home, they need more space. Also, the other thing that's impacting that, as Morgan touched on with this mass exodus of people leaving California and going to Texas, is that the people in the Bay Area are leaving Northern California, and they are coming down to Southern California, and they are looking at these investments and properties down here as a win-win because they have a lot of equity built up in their homes in the Bay Area and in Northern California, and they're able to pull that equity out of those properties, come down here to Southern California, especially an area like San Diego, and buy a new piece of property and still have cash in their pocket and, have a very nice, a very nice lifestyle down here. The weather's nice. And it's a really beautiful place to live. So that's another thing that's driving the price, and it's also affecting the inventory. I haven't looked at the inventory like this week, but just in the last couple of weeks, there is a really, really big strain on the amount of inventory in San Diego. And I'm sure that's also affecting other areas in Southern California.
Yeah. I'm going to draw some parallels from our previous segment where we were talking about the pump and dump GameStop deal and all that's going on there and the real estate market. You've said it before, and I'll say it again, that real estate, the equity in real estate is all about confidence. And a lot of the smart money in Silicon Valley and the Bay Area, there's a lot of rich folks. I mean, there's a lot of rich folks everywhere in California, but there's a lot of rich folks that live up there and that are rethinking where they want to live and where they're choosing to live. And they're selling at the top of the market. And and like you said, they're looking at this area as a good deal. Also, foreign investment, we've always seen, people from outside the country buying in San Diego is quite common. There's two ways to make money in real estate. One, in your primary residence, you don't have a renter unless you have a casita and you're renting it out, and then basically you're a landlord anyway, and generating income. But if that's not the case, if it's your primary residence, you're really banking on paying down the mortgage, getting a deduction for whatever mortgage interest there is up to the cap now, and then paying down the principal and seeing the equity grow as the value of the property grows. So that's the tricky part, because that is a confidence-based thing. I heard a few months ago folks saying that by folks I mean real estate agents, predicting that possibly millennials and Generation Z that are coming in and starting to buy real estate now maybe don't want the large house in the suburbs like their parents used to have. And then magically, almost as soon as that as soon as that urban, close living lifestyle was becoming more common, suddenly COVID hit, and it made a lot more sense to be socially distant and isolate and be have some of your own space to spread out in. And suddenly you saw those housing prices go up. At the same moment that literally happened, I mean, I'm a little bit of a conspiracy theorist, but not too much. But at that same moment is when they were saying that, because boomers were retiring and downsizing and millennials weren't in a position or having the desire to buy the suburban lifestyle, real estate was shifting from folks living out in the suburbs and having a lot of equity. Remember, equity is at risk, having a lot of equity that is at risk, and going to more of an urban landscape lifestyle. So here we are now in COVID, and everybody's social distancing, and everybody's doing pods for their kids in schools in their garage, and everybody's building out in the backyard in the she shed to work remotely. I mean, it's across industries. All of our staff is now working remotely. All of this is happening. So, and we see it from our insurance company relationships to the businesses that we insure. It's across the board. So it's a shift that's never been possible before, but because of the power of the internet and technology and where we are, it's actually happening, and it's creating more demand for single-family resident real estate here in Southern California. Is basically the bottom line, and where I wanted to bring that around to. Plus, mortgage interest rates. A lot of times a buyer's buying a payment, and if the mortgage interest rates are ridiculously low, they're going to see the value. If they can afford a little bit more house, or the value of that house ends up going up because mortgage interest rates are so low. Realize though that's also still affecting the owner in his or her equity investment. We'll go into that in a lot more detail in future episodes, I'm sure.
That's a great point, because I've even talked to a lot of agents lately, and they're like, a lot of people are not caught up in the amount of the house. It's what they can afford monthly. What is your monthly payment? Can you make that monthly payment? Does it fit your budget? And does it also give you a little bit more room? Because a lot of people find out that they can buy something for basically equal to, or even sometimes less than, what they're renting for. And that's one of the things that are prompting a lot of people to start to, go out and buy their first home. Interest rates are really, really low right now, and people can afford that monthly payment. And that's something that's also driving people into the real estate market. I also think that, it's hard for me to see an environment where we really go backwards from here. I think that that'll also have a positive effect on real estate over the next couple of years. as a lot of these companies, like you said, like, we're working remote right now. A lot of our insurance carriers are sending their staff to work remote. And as more and more people adapt and get comfortable with working from home or maybe, not working as much and maybe working in more of like a pod structure and not maybe, commuting to these large corporate campuses like they used to, that's going to keep more people in their homes. So I really don't see a way where we really go back to the way things were. And that could also have a very positive effect on, real estate. I think they also talked about, taking some of these commercial properties and even converting them into, livable spaces. And I think they've even done that in San Diego, where we're from, down in the city.
Yeah, they're rezoning a lot of space because the demand is not there anymore for commercial. I've seen it in Vista all over the place. They've rezoned a ton to build different kinds of and allow for different kinds of industry in certain areas. So absolutely. Well, let's if people want to know more about what we do and how we do it and follow our conversation like this, how do they go about doing that?
Oh yeah. So if you like our content or you like the show, we'd really like you to, like, comment, subscribe to our YouTube channel. You can find us on YouTube at Alta Vista Insurance. If you'd like to get on a call and set up a consultation with either myself or Morgan to talk about your insurance protection, you can find us on our website at altavistainsurance.com. You can book an appointment with us virtually. We can get on a call to talk about your real estate strategy and how we can provide a plan to help you protect your lifestyle and your real estate investments. We also have a Facebook page and an Instagram page, so you can find us on social media too. And just looking forward to bringing everybody more content like this, and also bringing in some other subject matter experts like we've talked about, some of our close friends, our business partners, talk to them about their strategies, how they insert themselves into the industry. I want to also hear some of their stories too, like how they built their businesses, what their, philosophy is on, growing a business, and also how that also relates to their real estate investment strategy as well. So a lot more to come, and we appreciate your time, and have a good weekend, everybody.
Yep, exactly. Like Seth said, like, comment, subscribe. This is the Morgan and Seth Show, podcast number 2 in the can. Thanks for listening, and we wish you all the best. Go enjoy your life.